Hi guys, this is an urgent message ahead of the CPI number this morning on the 13th of October 2024. And this is the CPI number that actually could get the market moving in a huge way. And there's many reasons for it. So number one, the Democrats don't have as much of a need to fluff the numbers anymore. So we could actually get a real CPI number, which is going to come ahead of expectations. And if the CPI number comes ahead of expectations at a moment where Federal Reserve is also dumping bonds and the yields keep going higher, that could take the dollar to a whole nother level above 106, possibly 106.50, possibly 107 over the course of the trading session later today and tomorrow. So unless a dollar dips today, we could have a really big move in the markets to the downside. This is not the move that should be happening, considering all the circumstances we've talked about in the last few videos. As far as the move in the dollar, everyone expects a move lower, not a move higher. Dollar keeps going higher every day. Higher CPI number will cause the dollar to move even higher if it comes a little bit higher than expected. So this could really cause the acceleration in the bond sell-off. There are signs everywhere that nobody is buying the bonds, meaning China is not showing up for the auctions. They're not interested in buying. There's no surprise there because, well, guess what? Well, China's shifting their trading partners. They're doing a lot more business with BRICS. They're doing less business with the United States. They're trying to prepare a nice setup for themselves. And chances are, with these tariffs, there could be a chance that China will be doing less business with the United States. So there's less incentive for them to be buying United States treasuries. So if they're not buying this short-term bond expiration, we could see some failed auctions ahead. At the same time, Japan could become a major contributor in selling U.S. bonds, considering the weakness in yen is making the trade deficit numbers from surplus to deficit. And again, if the dollar moves higher today, that's going to be challenging for Japan not to dump some of the U.S. bonds. So we could potentially have China selling. We could potentially have Japan selling. We have definitely Federal Reserve selling. We know the numbers on that, 106 million by the end of 106 billion by the end of 2024. They need the money for the budget desperately. The government is going broke. There's no need to discuss that. That's been going on for a while. No surprises there. But the need for more funding is only going to accelerate. So while really, we're talking about Federal Reserve trying to ease rates, but at the same time, they're actually selling bonds with international participants are diminishing the demand for bonds. So there's a high event type situation where we could have a failed auction where the number of offering of United States bonds is not going to be matched with a great demand, and they may not be able to sell all the fucking bonds they need to sell. At the moment, the government needs the money. So this is a serious situation. Most of the market participants consider it a long shot, but the CPI number today, if it comes a little bit higher, it's certainly going to make this situation more probable. So the bond sell-off, if it accelerates, the rest of the market sectors will take notice of that. Anytime you have a sharp move in either direction in anything such as oil, sharply higher prices in oil will get the market moving in a negative direction. Sharply lower oil prices will also indicate really weak demand and problem with the economy, and will also get the market moving in a negative direction. Bond sell-off is one of the key indicators that actually the crash of 1973 and the crash of 1987 have in common. Preceding to the market crash, in both of those years, bonds have dropped off substantially, and shortly after that, stocks collapsed by a magnitude of as much as 49% in 73-74 transition. And one-day drop on 87, October 19th. That by itself was close to 30%. So with that said, I mean, all eyes on bonds today, guys. If the acceleration in bond selling continues, which is likely to happen if CPI number comes a little ahead of the expectation, expect the market crash we've been predicting now for the last few months to materialize rather quickly. There's barely any buyers in the market of stocks. It appears the market goes higher, but it goes higher in such a low volume. It's only going to take a few sellers to bring the markets to its knees. So the sell-off could be sharp and rapid and fast. You better be ready for it. That's all I'm going to say. You'd better be ready. You'd better be watching the CPI number at 8:30 and not just watching, but taking fucking action, guys. So if you're not sure exactly which trade as a result of this can go 100x, you should be getting in touch with 13 Market Moves coach right now by going to 13marketmoves.com or 13mmtv.com. Don't waste a beautiful, glorious market moment to profit 100x plus on the short side. Let's fucking roll.